MTN SME Hub. Link to growth. Link to success. Link to the ultimate resource for business advice and insights.
Welcome back to the Big Small Business Show. In studio with us today, we've had Vuyisile Foto. We've learnt all about his business, and he's dealing with a problem that many entrepreneurs suffer from, and that's cash flow issues, especially in a business that's growing. So I wanted to start off where I said I didn't like your answer. Let's start there. For me, the service is very, very important. But the problem with starting your answer to what makes you special and what makes you different as service is it then makes you lazy to think about what else could make you different from the market. Because everyone's going to say that it's customer services. People are going to say that. And yes, you could say you are really good at it, but it's very hard to differentiate yourself in the long term with customer service because everyone expects that. Okay, so it just takes your mind off the opportunity to look for a differentiator into the future. That's why I didn't like that answer. Okay, but let's just start off with an understanding where you can find funding. Effectively, you can get funding from your profits. Okay, so your net profit, your retained income. You get money from people who lend money, like banks or non-traditional financial institutions that lend money, and you can get money from investors. Okay, those are generally your three biggest sources of where you're going to find funding. I'm sure you knew that, but I'm going to come back to that because I'm laying the foundation. The first thing that I would say look at now, if I were working in your business, would be in that stock turn. When I asked you how many times you turned your stock, you said every 2 to 3 months. Unless you've got minimum order quantities that are in place, that you have to service that minimum, the MOQ, the minimum order quantity, I would then obviously drop the order quantity and turn my stock more often. Okay, knowing of course what the minimum order quantity is and what the delivery period is, and having a buffer in that period. It feels like if you're holding stock with a cash flow issue of 2 to 3 months, it might be too long. Okay, maybe you want to reduce that down and work out how to get that down to 6 weeks of stock, which gives you a little bit of a buffer and an opportunity to ensure you got stock as you grow. So that would be the first place to take free cash out of your stock. Okay, and very often in that stock management, there is going to be the Pareto law of 80-20. 80% of your income is coming from 20% of your stock items. I've worked I've invested in a business that's got a lot of SKUs, a lot of items that they sell. And when we did the analysis, it was exactly that. The Pareto law is the 80-20. We dropped the number of SKUs, we increased the cash in the business, and we didn't impact the sales very much. It was worth culling the products that they want every now and again. And often what we have is some stock items that we love, but the customers don't love it, So, sometimes we hold on to things that we shouldn't hold on to. I'll ask you about your margin. And to me, that your margin should be starting to increase, because you should be starting, if you think about it from a buying power, the day you started to today, your buying power should theoretically, if you're growing, get bigger, right? So once again, if you are shrinking your number of stock items, that means more of your sales will come through less products, which is higher volume, which means you can command a better price, which means if you keep your sales price at the same level, you're going to have a higher margin. So I would very much concentrate on moving your margin up at least a couple of percentage points, and find out how to do that through either your buying, or often what happens in smaller businesses is their price point can move up by 5 Rand or 10 Rand very easily without any loss of sales. But that margin is something that you need to become obsessed with, is to look after your GP margin. So now I'll come back to your 3 sources of income. So if to me, I wouldn't. I mean, it feels like in the clip you spoke about the fact that maybe you shouldn't supply the retailers, and because the cash comes from the end consumer. I don't know the answer to that exactly, but my instinct, with the little information I have, is not to do that. It's because of the volume that they're supplying. They're also building your brand out there. So when they're stocking your product, your brand is getting out there. So my instinct is not to cut the retail side of it, but my instinct is to make sure that you have one person dedicated, at least partly, to collecting money. That's not you. You have to build that capacity in you, that you're chasing money all the time, and somebody's job, and you're monitoring that in your monthly financials. So you want to make sure that your debtors days is in your environment is less than 30 days. You have to keep it below 30 days. Your debtors day below 30 days. I would, if in this situation, start to tell the story and look for an investor. Because to me, if you're sitting here and say you haven't found, if your margins are right and your story is right and you haven't found money from a bank yet, it's telling me something else, okay, that you're not telling me, okay, right? So to me, where I would go now is to put the story together to find an investor. And I would find that financial boost, because it feels like you just need almost a little capital boost to just get you over the hump. And to me, that's why I asked the question, who owns the business? So for you to tell the story, to get a good valuation of the business, and not sell the shares, but issue new shares. The reason why I don't sell shares, issue new shares, is if you sell shares, the money comes to you, and then off you go. Okay, if you issue new shares, the money goes into the business. Okay, and you capitalize the business. That means your balance sheet gets better. And that means now, because your balance sheet is stronger, now you can also use the stronger balance sheet to go back to the bank, okay, with a stronger balance sheet, and get your second round of funding from the bank. So you need to unlock that through a strong balance sheet and through the cash flows. So by getting an investor the right investor at the right valuation, issuing more shares, you have a double whammy. You capitalize the business, you cash flow the business, you get more stock to sell, you get a better story, you go back to the bank, and now you get your facility that you need. So that's the journey I would go. Manage your stock, have the right person, get an investor, and take it from there. That's all the advice I can give you in 8 minutes. I hope it's helped you.
Yeah. Yes, it's eye-opening.
Yeah. Great. And I hope that was eye-opening for you too. And of course, do remember, if you think it, write it down and make it a reality.
The Big Small Business Show, proudly sponsored by MTN Business.